Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, time to introduce a new crypto asset to the channel. We're finally looking at Ethereum today, or Ether. Now, I recently completed a deep dive on Ethereum for my Patreon subscribers, and it's been posted to the Patreon and the Discord, and the count looks something like this. Now, as you can see, this is a very busy count, and we dug through this on a smaller time frame, so I'm not going to subject you to that, as it's just a bit of a mess. So what we're going to do is just switch off that count. We're going to bring up a simplified count to talk about Ethereum over the long term first. So this is the long term count in the log scale, and I think we're in a cycle wave 3. Perhaps having completed primary 4, perhaps not, now going up into a primary 5 to complete cycle 3. So the first thing I did here to break down the various corrections was, as I always do, we're looking for primary 1, 2 of cycle 1 pitchfork here. So all this does here is confirm that this first 5 wave move is a completed wave degree here, and then we fall out of this pitchfork into a larger correction. Okay, so that's how establishing the major corrections first. I mean, if you want to sign up and watch the deep dive, you can. There's a lot of analytical value in the way I do the Elliott wave degree building and go through the count in simplified terms and then in the more complicated count. But essentially all we're looking to do is isolate the corrections, okay, in an obviously observable manner, and then find the wave degrees at greater cycle level, primary level, and observe the corrections inside of the geometry of a pitchfork or a channel, find the larger correction completions, and then carry on doing the same going forward. And that's how I always start my long-term analysis when looking at something. So cycle wave 1 complete, cycle wave 2 complete. This was the 2018 bear market. Okay, and now we're up into cycle wave 3. Excuse me, doodling on the chart again. Meant to click on the cursor, which will complete. We could talk about some projections for it maybe later, but we need to be sure that we've completed the primary 4 before we project the primary 5. We may have done, so we can have a look at a possible projection for the cycle wave 3, and then once this cycle wave degree completes, we will then get another equivalent to the 2018 bear market, and we'll get another cycle wave correction. So looking at anything between 60 to 90% sell off again, and this will be the next great opportunity in the crypto space across all assets, will be at the next cycle wave correction, because when these bear markets come along, they are just purely technical corrections to the price at a cycle wave degree, but to the average person who isn't thinking about price in that way, it will appear to be the end of the world. There will be a lot of FUD, probably governments cracking down again, exchanges getting completely wrecked, outlawed, or God knows what else it'll be. Heavy-handed regulators. There'll be something which comes in which scares the pants off of everybody, and it will be the end of the world. The sky will be falling, Chicken Little will be running around in a panic, and we'll just wait for the 6-month, 12-month, 18-month bear market to play out and pick up the assets we want at a 90% discount. And that'll be the next great opportunity that I'm really looking forward to. But it does appear that it is still several months off, if not longer, until we get there, but we will get there. So something to look forward to in the future. Alright, now that we've spoken about that wave degree, we're now in this wave degree of what I think is a primary 5 of a 3. So the pitchfork for this circumstance, which is the one we've been using here off of a primary 1, 2 pivot, we breached the top of this, and this is the only thing which makes me suspect that maybe the wave 4 isn't complete yet, and we need another move down to complete. It is a possibility. It's not how I've got the short-term count at the moment, but we'll come in and look at it purely because we're so bullish here that to stay outside of the pitchfork, which is what we would have to do, we'd end up breaking this whole structure. Now, you can give it the benefit of the doubt, because the depth of the wave 2 here is what's created this skew in price. If we'd had a higher wave 2 bottom, the pitchfork would have been angled more vertically and would have more likely contained all future price. But because of the deep 2 placed off of this 3 wave pivot here, that means that the pitchfork is quite, what can we say, a gentle angle rather than a steep angle, and therefore price has easily breached it. Now when we come into some of the smaller time degrees, that's the more recent one. That's that one. Do I have one for that? No, I don't. So I'm sure I had one. Intermediate, minor 1, 2. No, that's this one here. I'll tell you what we'll do then. I think I've accidentally deleted one. I'm just going to pop one back on the chart. And then we'll get underway with the more recent price analysis with the more complex count. Okay, there's the one. We'll lock this in place. We'll come in on a smaller time frame now. Okay, and this is the identity, just like I showed you with that initial move up into the 2018 top. This is it presented again on a smaller time frame, and this is identifying primary wave degree. Okay, we've done primary 1, 2, right, and now we're looking at intermediate wave degree to find a completed wave 3 at primary degree, and that's what we've done here. This is what this pitchfork is displaying. I think this is a flat pattern. I'd have to look at the actual count, but I'm pretty sure it is. Let's just drag this down to the low. Okay, and then sure enough, once we've completed this wave degree of 5 waves up, we peak here, and then we fall out of it into a 4, and now we begin another move up at another wave degree, which is this one here. Okay, and that's just how it works. We march up through the wave degrees over time, and we keep inside of a larger pattern. Right, so let's just hide this, and let's now bring up the more complicated count, and then we can zoom in, take off a simple count, bring up this big convoluted thing here, and I have stripped this down, believe it or not, from the amount of counting there was on it, just to try and make it more observable. Let's just zoom into everything from the peak of the 3 here. Okay, and let's just bring up our trend lines. Alright, so this is an A, B, C with a triangle in the B, and then we've come off of the low here in 5 waves into a minor 1, and then we've had a 3 wave ABC expanding flat into a 2, and now we've either done 5 waves into a 1 at intermediate degree. This is the 1, 2, here's the 3, here's the 4, into a 1 at intermediate degree, into a 2 at intermediate degree, and now we're off in a 3 and we're running. Okay, that's the most bullish interpretation. Another way of looking at this would be that we have gone 1, 2, as we suspect here, but instead of 3, a small 3, 4, this is now the 3, this is now the 4. Okay, and now we're coming up into a 5 to find the 1 before we retreat into the 2. That's also a possibility, and the reason I think that's a possibility is if we just pick out the pitchfork here, you can see that we've stayed pretty much within it. Yes, we've breached the outer bound, so maybe we've done a 1, 2 at intermediate degree, but it's also perfectly feasible to say 3 and to say 4 related to this minor 1, 2 into minor 3, 4 this would be, and now we're coming up into minor 5 to complete what would be intermediate 1 here, and then a proper break of this pitchfork and a proper breakdown in price to bring up to create the larger wave degree at intermediate degree. Okay, now that's because we haven't broken this pitchfork very convincingly that I'm still considering this as an option, and we haven't invalidated or gone through the invalidation point, which is the top of wave 1 back here. Price has not broken this level, so this could still legitimately be a 1, 2, 3, 4 structure before pushing up into the 5, but I've decided to count it at intermediate degree because that's what I've done with Bitcoin, and I find it unlikely that Ethereum would be doing anything different regarding the local count. So let's just hide this, Okay, so let's just have a quick look at our Fibonacci extensions here. If we take our wave 1 and project it forward, we find the proposed 3-4, this is in log scale. Let's just switch off into linear scale. We find the 3-4 as I've placed it right at the 2-618, 3-4 at minor degree, which retraced into 3-4 at minute degree, very common for a wave 4. Now we've got the potential of the wave 4 here at the 3-618 in linear, A, B, C into the 4 here, which is also a perfectly acceptable target for a wave 4. Okay, now in log scale, we come to the 2-618, so this could also be 3-4 as well as 1-2, so it's definitely an option. I'll tell you what, we don't need this. And it does seem to have, you know, a greater relationship, that this wave degree seems to be related to this in terms of the scale and size of the corrections, whereas this interpretation seems very small and short in comparison, so I do have my doubts. So let's have a look at this correction then. Let's look at the 4-hour time frame. Switch off of log into linear scale. So doodling on the chart again. There should be a quick button you can press to go back to the cursor. That would save time. Right, so we've got a parallel channel here. Now this is a classic way of tracking a 535 zigzag correction, is we take the A, we take the start of the correction, we place it on the A low and the B high to project the C here. You can see that we just failed to make the bottom of the channel, and then we bounce in what does look so far to be an impulsive price action. And if we just check our lengths here of the C relative to the A, we should get 100% or close to. So let's just take the length of the A, project it from our B, and we just wick through the 100. It's pretty much to the tick, 1-to-1, and then we bounce. So that's a pretty classic zigzag correction inside of a channel at 1-to-1 parity. So that's the reason we're considering this to be a 1 and a 2 at a larger wave degree. Now it is a zigzag, and we had an expanding flat we're suggesting here with the 1, 2, 3, 4, 5 here we've got, or 1, 2, 3, 4, 5 into the 1 A, B, C. We had an expanding flat at minor 2. So although this is a zigzag, it would alternate flat pattern in the 2, zigzag in the 4. So it is potentially possible. Either way, both interpretations, right, whether it's an intermediate 2 or a minor wave 4, both interpretations have price going to a new high above this level here. Okay, so we should step up now. 1, 2, 3, 4, 5. So we should have a pullback. We appear to be having a little pullback at the moment. If this is completed 5 waves, and let's just come back to the cursor. It does appear to have a 5-wave structure. 1, 2, 3, 4, 5, and now we're probably pulling back in the 2. So we'd be looking for 50 to 61.8%. It doesn't have to be that deep, but that's the area we'd probably be looking at. So around 2,914 to 2,852. We would expect to see the price pull back, and then that would be wave 1, wave 2, wave 3, wave 4, and then off up to a new high. Okay. Right then, so that's the bullish interpretation. Completed wave 4 or completed wave 2 correction. The severity and acceleration in the wave 3 that we see will be very telling. If we really start to ramp up, then the likelihood that a completed correction at a larger wave degree has occurred and we are now into a larger wave 3 becomes more likely. If we just kind of meander up here and we build up negative divergences the whole way up and there's less volume in here, then it's more likely that it's a 3-4 into a 5 to find the 1, and then we will correct into a 2. So price action should tell us what we're in. If we explode out of here, and we just don't stop, then it's likely we've moved into a wave 3. Okay, at intermediate degree. So now that we've done that, let's just save the chart before we discuss the bearish option, and let's just project forward from our wave 4 low. What we some targets we can shoot for. So I'm just going to turn off the count, bring up the simple count again. I'm going to add this little thing into the current count, and we'll just hide it as well. Okay, so let's. I think we have to deal in log in order to do this. Come back out to the daily time frame. So first things first, let's just have a look at the relationship of this primary wave 3 relative to our wave 1 and our wave 2. Now this is just one of those things. We come straight to the 2618 target for our 3, so that's, as well as the price structure, as well as the geometry containing the price here, and as well as this 5-wave move completing and falling out of the pitchfork as well, and the completion at the 2618, all of this points towards this being a wave 3. Okay, and therefore this is either completed for. I've said this in Bitcoin as well as to why it is I'm so convinced that we've completed the wave 3 at this level. Okay, off of log scale, the measurement doesn't mean anything. It's such a huge move that we go well beyond any of the extensions. So to account for the price skew, I've got a video on log scale and linear scale on my Discord, which you can watch if you join Patreon, which explains why and when we use log scale and linear scale, but we're accounting for a 5,000% skew in price. Okay, so we cannot take linear measurements with a skew of 5,000% in price. We need to look at things in log scale, and then we get this beautiful 2.618 target. So we've come to target. So having accounted for the skew in the wave 3, we should project forward on the same basis in log scale if we're going to make projections for a wave 5, because once again the linear scale just wouldn't make any sense. So let's take a couple of classic targets. Let's take the whole length of 1 to 3 and project this from 4 to find the 61.8% golden ratio. This is one target. And we need to bring up our usual fib, not our extension, to do this. Okay, so the 61.8% based off of 1 and 2 from an assumed 4. We will look at the bearish idea before we complete. So let's just pop a line on here, lock it in place, and put a gold figure. And we'll come in and place this price label a little bit more accurately. Okay. And lock this in place. So we're looking at 20k for Ethereum to top out in the wave 5. This is just using basic Fibonacci projection. So let's get rid of that fib. So that's one target. I've heard a few people actually, even some of the bigger fund manager sorts, who said that 20k is a good target for this cycle. I'm not sure if they're using the same analysis to find that, or whether it's just price model projections or whatever. I don't know. Either way, this is 61.8% of 1 and 3 from primary 4. Put this in yellow so we know it. So we immediately identify it as a golden ratio target. We've locked that in place. We've locked that in place. Okay, so that's one. So as you can see now, what I was talking about earlier, which is the next cycle wave correction being a 90%er or 60 to 90%er, you can see how we'd only be coming all the way back to the 2000s if we had a 90% sell-off, which would be huge if you were late getting into this cycle. But really for us here, who've had the luxury of riding this whole thing up and then cashing out somewhere near the highs here, this would just be an absolutely amazing opportunity to get back into the marketplace. Alright, so the next target to look at, we will take a more traditional extension. We'll take the wave 1 projected from the 4. Okay, and this gives us a much more conservative target, than the other one. So this gives us 7,642. So we're going to more than double from where we are currently. We're going to see more than 100% go on the price, even with this much more conservative estimate. For me, I would lean towards a more optimistic estimate, purely because historical price data in the Wave 5 is so, phenomenally bullish normally, as everybody and their mate piles in. But it is possible that we only come to this target as well. So, Wave 1 from primary 4. Okay, so there's a couple of long-term targets. Between 7,500 and 8,000, 7,500 and 8,000, somewhere in this territory here, or all the way up at 20k. Okay, either way, long way to go. Looking at the current move, we've got, if we're suggesting that this is a 1 into a 2, a big long 3, a 4, you could end up anywhere in between any of this really. Okay, but either way, big move to come. This could still just be a 1, 2, 3, 4, 5, remember, and that would be a 1, bringing us to the previous high. That would be very bullish, I think, more bullish than the current interpretation. Okay, so now that we've done that, we've looked at our targets. Let's just throw these into their own little folder. Okay, let's try that again. And we'll just call these cycle 3 targets. Excuse me. Right then, so now finally a simple count, and we'll look at the bearish interpretation. And we're going to have to zoom back in to do this. Alright, so in this scenario, I'm suggesting that we had a thrust down in a 5 waves into an A. Here, I haven't labelled that, let me just do that now. 1, 2, 3, 4, 5 into an 8. Okay, let's just shift this down a peg. So this was an A, rather than suggesting that this swing was an A. Okay, we get a sudden A, and then we get this big swing in a B, where we go A, B, 1, 2, 3, 4, 5 into a B. Okay, and now we're going to march down 1, 2, 3, 4, 5 in a C of the 4, bringing the price down considerably. Okay, so this is very bearish obviously, and if this is correct, we will break this channel as we continue to work our way down into the 3, and then the relationship between what is currently A, B, C will become more severe. We will get 1, 2, 3 relationship rather than A, B, C. So let's just come off of log back into linear. We've gone 1 to 1 so far. If the price were to continue to break down violently here, and we were to go past 100, past the 123.6, past the 131.8, any further than that, we've got to start suspecting it's a wave 3. And if we come to the 1618 here, that would be a pretty strong sign that we're in a 3. And then we should see a correction into a 4, and then another flush down into a 5, taking out all these previous lows, leading the price to a deeper wave C correction, and then that would be primary wave 4 complete, and then we would have to reconsider all of our projections for our long-term targets, as the primary wave 4 would now be at a lower level. Okay, a lower level than these levels here, and therefore we would be projecting lower targets in the long term. Okay, and that's the bearish count. At the moment, I'm still leaning more into the bullish count. This is just, like, there's no certainty. I don't have a crystal ball, so you mustn't take that as financial trading advice. Okay, you should always take the trade set up safely as they occur, and don't let yourself get trapped. But having said that, if we do break down here and we continue to fall down lower, then we have to consider the possibility that this is a bearish count, and then the opportunity will actually be better in the long term. You'll actually get better price in the long term, and all we really do is just take the A on the larger time frame, project from the B, and you can see 1-to-1 parity actually brings us to, you know, $1,400, 1406, which is just not too far off the prior lows. Okay, and that would be an A, B, C, zigzag with a slightly lower C. I don't think we can call for a flat pattern, but what we'll do, just in case we can interpret this as A, B, C, or A, B, C, so if we could get a free wave count in here, it would be possible to get a free wave count in here for a 335, and that would be a flat pattern instead. Let's just get rid of those trend lines so we can clearly pick out the top and just see if we have a 90% retracement. I think we're just shy of it, but it's worth looking at. No, we're just shy of it. So we haven't come to 90% before we turn. So it's more of just a dragged out zigzag than we can call it a flat pattern. Flat pattern with at least, we'd expect to see at least 90%, which is the purple line here, or perhaps go to new highs before coming down in an expanding pattern, in like an expanding flat or a running flat completing before the previous lows. I don't think those are the options. From a bearish point of view, I would say that this is 5, 3, 5 to a new low below the previous lows, and that's the bearish interpretation. Alright then, let's just do some basic technical analysis before we wrap things up. Alright, and we're just going to bring up our exponential moving averages here. We're going to hide the count, we're going to bring up our momentum indicators here, and I think we'll come out to the weekly time frame. So a quick rundown, and I just got to get rid of that parallel channel as well, excuse me. Just got to give you guys a quick rundown of what you're looking at. Don't need that count. Okay, so we have 4 exponential moving averages on the chart, 10 in yellow, 20 in blue, 60 in orange, 250 in green. We have an RSI set to a 10 close, with the green 30 level representing oversold and the red 70 level representing overbought. We also have a MACD with a 10 for the average and a 20 for the signal here in blue and orange respectively. So what can we see here on the weekly time frame? Well, we're below the 10 exponential weekly moving average. We've wicked to and through the 20. We've currently bounced. We have a wick to the downside, but the price is still looking pretty bearish with the low of the candle currently below the previous closes of the last 2 weeks. We would very much like to see this week's candle close back above these 2 lows. Would be a positive for the week. We have short-term some negative price, some negative momentum here in the MACD. We haven't turned red yet. We're still above the zero bound, but we do appear like we may have the average crossover the signal. The blue line through the orange line here is possible. Could see some red momentum build up here on the histogram. If so, that would probably accompany another move lower. But we'll get a better picture on the day time frame. We've come back up to overbought conditions here during this rally, only just getting above the 70 bound, falling back into neutral territory currently. On the daily time frame, we are below the 60, the 10 and the 20, with the moving averages likely looking like they want to cross over the 60. We're still a long way off the 250. Okay, so it is possible that this could be a deeper correction into that wave 1, that wave 2 to break that pitchfork. So that's the one thing we didn't consider. So either 1, 2, 3, 4, 5 to come, 1, 2 complete, or 1, 2 potentially deeper. We have done a round trip at this degree, where what I like to call a round trip, where we go from overbought to oversold, only just into oversold, and we bounce back up into neutral territory. Still bearish momentum on the MACD here. We have strong divergence, which is currently playing out between the high here on the 7th of August in the RSI, and the lower high here in September between the high and higher high in price. We've seen the same in the MACD, high and lower high, higher high, and now that's played out as this bearish move down here in this what looks like a free wave move, and more bearish momentum still building on the histogram here. So would like to see a bounce higher from here. Really, a more we've seen a move up and back. Like to see a bounce higher now to confirm that this was a completed one-to-one parity ABC. If we take out this low, then the bearish case suddenly becomes much more viable if we take out that low. So that's something we have to be aware of. 250 down here, which has proven to be major support before. We see here around the bottom in 22nd of June, and we see also here the bottom of the 20th of July. The 250 has acted as major support before the moving averages cross back up into the positive territory. So have we got, I don't know why, but my volume profiling seems to have been taken off of the chart. So based on the visible range, we can see here that the point of control is right around our 250, around this series of free lows here. So from a volume perspective in the profile, this is a big area of support all the way back down here. If we were bearish and we were looking for support bottoming around the lows or just beyond them, as we discussed, this would likely offer temporary support at least. So we may not come anywhere near it. We may already have been completing our 1-2 ready to push higher. So really, to wrap up, I would argue that if we're going to be bullish, we do appear to have an impulsive move off the low, but we want to get out of this corrective channel, clear that B wave high. Okay, this high here, we break out of this channel, create a new high above this level, and then that's far more likely to have been an ABC zigzag into a new impulsive wave coming up. Okay, now at that point this could be the 5 between the 3 and the 4 into the 5, remember, and then we have a deeper correction into a 2, or we've completed that 1, 2, and now we're going higher. Either way, I think that's what we want to see. A move back above these moving averages and move through this channel, a move above that high would give me much more confidence in the bullish count. It's just be patient at the moment and wait and see what the price tells us is going on. You know, we've had this sudden breakdown while I've been recording so we'll have to wait and see what this is. Is this 1, 2, 3, 4, 5 into an A, come up into a B, down into a C to complete the 2? Right, that's one of the options. Right, no more waffling. I'm going to leave it there, guys. Thank you very much for joining me on this technical analysis of Ether. If you're new to the channel, you like what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. And if you feel like it, feel free to leave us a comment in the comment section below. Alright guys, take care, and that is probably it for the week now. And I'll be back with you soon. Oh, and before I go, as always, thank you to my Patreons. Your support is greatly appreciated. If you're interested in joining Patreon, there's a link in the description box below, and if you're not following me on Twitter yet, there's a link to my Twitter feed there as well. Alright guys, take care of yourselves, and I'll see you soon. Bye.